SingularityNet is one of those very interesting crypto projects that does have a lot of things going for it. It's got the very famous founder, Ben Goertzel, who has been on Joe Rogan and on Lex Fridman. It's got the AGIX token with relatively reasonable tokenomics. It's got the cooperation with Cardano. It's also got continued technical development, right? When you look at the GitHub repository, you do see activity regularly. So this all looks good. That being said, there is a problem related to token control. Now, how bad of a problem that is, I let you decide. Let's dive into the details. Let's look at why Singularity.net is even of interest. Now, when you go to CoinMarketCap, you see Singularity.net as the second largest of the AI cryptocurrencies. There is the graph that's been listed higher, but the graph really is not focusing on AI. The graph is focusing on indexing blockchain data, on making blockchain data available via API. It's not really related to artificial intelligence. SingularityNet is though, right? They've got the Artificial General Intelligence Exchange Token, AGIX. It's really focused on artificial intelligence. That makes it so interesting, right? The largest in terms of market cap. Now, when we look at this, right, how large is the market cap? It's more than $500 million floating around, right? So 547 million, or fully diluted, 908 million. So it's roughly got like a 2x, a bit less than a 2x in terms of inflation ahead of it. That will unlock though over 97 years. At the beginning a bit faster, then of course gradually slowing down. Similar to how also Bitcoin supply is first going relatively quickly, and then there's the halvenings, right? So you've got that. Now here is the founder, Ben Goertzel, right here holding a TEDx talk. Then we've got London Real, he's been on an interview there as well. Then we've got Joe Rogan, and here, this is probably the most impressive, the interview with Lex Fridman, where he has been talking for more than 4 hours. Why is this with Lex Fridman so interesting? It's because Lex Fridman also has a background in artificial intelligence, right? He was researching around driving and artificial intelligence. So that's that. Then we've got the GitHub repository, also with updates, updated 16 hours ago, updated yesterday. In total, we've got, I think, 140 repositories or so. Yeah, 144. So there is activity, there are developers here, there is something happening. And the price is also reflecting this. That's probably the reason why you're even watching this, right? The price went up versus Ethereum, so it outperformed Ethereum by 650% since January, right? Since beginning of the year. Now, what is the problem? The token supply is not the problem. Very often you see this in crypto projects, right? New crypto projects are very often failing in terms of token price development because of their circulating supply increase. This is not so bad for AGIX. Here, the circulating supply went up by 20% in the last year. As said, the maximum supply is at 2 billion, right? So there isn't too much crazy inflation happening. The first problem that I noticed when researching AGIX is the liquid supply on decentralized exchanges. So look at this. These are the different liquidity pools where you can swap AGIX against. The largest one being 1.5 million in terms of liquidity. Then we've got 1 million, then we've got 0.3 million, and then it already goes to 11K, right? So in total, less than 3 million of liquidity. And these pools always exist of two sides, right? On the one side, you've got the wrapped Ethereum, for example, or the Tether. And on the other side, you've got the AGIX. So the AGIX, the token that's floating freely on the blockchains, is roughly worth 1.5 million, half, right? One half is the wrapped Ethereum, the other half is the token. 1.5 million. And so that means when you buy AGIX, say on 1 inch, right, for $250,000, for 250K, you are moving the price by 12%, by more than 12%. Now what you see over here is the slippage, right? You see 6.3% slippage. But the way this works is when you buy a token and you generate, say, those 6% slippage, it's simply just the average price that you got this token for, the average worst price. So you buy up all those tokens from the liquidity pools. The first tokens that you buy are cheap, right? And the more you take out of the liquidity pool, the more expensive the price gets. And so the last tokens that you pull out, they are very expensive, right? So when you buy a lot of the token, you buy up up this curve, and your average price on this curve is 6.3% more expensive. So the very last token that you buy is actually 12.6% more expensive, roughly, right? This is a curved line, it's not linear, but something like this, right? Around 12% more expensive. So when you buy 250K worth of the token on 1 inch across all those different liquidity pools, you're pushing up the price by more than 12%. The next person that buys has to pay a 12% higher price. Now this is interesting because the market cap, as said, is 550 million. But we only have to put in 250K to move the price by more than 10%, by basically increasing the market cap by 50 million. Now, how is this possible, right? How can the market cap increase that much when you only invest that little additional money, when you only swap that little tether in there? That's because of the problem that I'm about to show you. It's how the token is being controlled. 29% roughly is in a Binance wallet. So really, most of the trading of this token happens off-chain, happens in these black centralized boxes such as Binance. When you look at the trading volume here in markets, you see it. Binance trading volume 35%, trading volume 27%, for KuCoin trading volume 5.6%, etc., etc. Uniswap, the very first decentralized way to swap this, has 0.4% of trading volume. And that's potentially a problem because you subject yourself to market manipulation. The people that set these order books, right, they can make them thin or they can make them very tight. They can control how sensitive the price reacts to demand. Meaning, if you trade here on Binance, the big whales on Binance, they can push you around however they want. It's not that easy to do this in decentralized place, right? In decentralized places, you have also got higher trading fees. Once the token supply is that much in the hand of centralized players, you have to play the game properly. You can, for example, not bet on levered trades, right? These whales, they monitor wherever leverage comes into play. And when you see a lot of leverage in either direction for SingularityNet, the whales are going to liquidate you. So be very careful in these centralized tokens to use any kind of derivative instrument. You only want to buy spot if possible. But even if you do this right, be prepared. You are in the end the play ball of the really big guys. You don't even have to look that much at things such as token inflation, etc. Simply because it's just controlled in the hands of a few people that own it all. So the project itself looks interesting. The price development looks interesting. The founder looks interesting. There is fundamentally something happening. So all of this is good. The only thing you have to be aware of is that volatility is likely not going to go down for this coin. This coin will shoot up and it will crash down simply on a whim of a few people that hold the whole supply on Binance and partially on KuCoin. That's the thing that you're signing up for. So if you're interested in getting into AGIX, make sure you have long enough of a time horizon and that you can withstand these potential strong shakeouts to the top and to the bottom, because I think it's very likely they are going to happen. And you can also potentially use this as an opportunity, right? You could set your buying order relatively low and hope for this very short-term wick downwards when maybe the whales try to liquidate a few people that have stop losses, right? So you could say, okay, maybe I put my buy order at like 40 cents or something and hope that it short-term goes there. And the same is true the other way around, right? You could make your sell order just for the case that for the very brief period of time it wicks up. You can make your sell order in the Binance interface at, say, 60 cents and hope that it gets filled, right? That you can sell at these elevated prices. So yeah, be prepared for manipulation. That's the thing that I think is very important to say about AGIX. This is not a decentralized coin that's just being traded across random people. This is in the hands of the big guys. Now there's more discussions around altcoins in the Telegram and in the Discord channel. Feel free to also check out the premium membership. Looking forward to see you there and of course in the next video as well. Bye bye.